In a previous video, we introduced the RFS study, which allows you to compare stock performance against a benchmark and focus on top performing titles. But what happens when the benchmark itself is declining? A stock can still outperform a falling benchmark, but sometimes it's better to step back from the market altogether. That's where MarketPulse comes in. MarketPulse is your tool for measuring the intensity of market movements. When most stocks move in the same direction, whether up or down, the pulse strengthens, offering insights into market momentum. How do we measure this pulse? We rely on key indicators. The number of stocks rising or falling, how many stocks are trading above or below a set moving average, the number of stocks making new highs or new lows. However, instead of focusing on individual stocks, MarketPulse analyzes baskets of stocks like the S&P 500 for the US or the Stoxx 600 for Europe. After the close of each trading day, the market pulse is calculated by tallying the rising and falling stocks. Repeat this every day and you have a clear picture of market momentum. In TransStock, you'll find the US pulse on the left and the EU pulse on the right. Each pulse is calculated using 7 most reliable indicators. When the pulse turns red, it means that the majority of stocks are negative, signals that trend investors might find riskier. For more detailed insights, the Sector tabs provides the same analysis but at the sector level. This allows you to see which sectors are outperforming the overall market based on momentum, giving you an edge in sector rotation strategies. Good luck!